and welcome at the new episode at Stocks Advisor channel. Today we will speak about new stocks in our list. It's Twilio, Novavax and Chegg. If we start with Twilio, we can see that today Twilio was sitting exactly on its moving average 20 and seemingly finishing its upwards wave and kind of trying to restart the new wave. But if you look at the after hours trading, its price went down another 1.26%. And then the hope for recovery of the current wave is a little bit vague. So most probably we need to prepare to enter a bit lower levels. And to discuss those, let's do a more closer look at Twilio. So Twilio is actually a company that recently showed quite nice Q3 report. Actually, it was better than expected. And as a software development company and communication development company, actually communication software development, it's rising among other companies these days. And we can see starting from the May quite nice upwards move here. And then this jump actually continued stably, almost linearly all these months, showing quite nice behavior. And actually moving averages 20 and 50 were in vicinity of each other, when moving average 200, this red line, was far on the bottom, going in parallel. So this is kind of an example of parallel movement upwards behavior of the stock. By the way, these moving averages are depicted here on the left, being green, blue and red lines correspondingly. So it's almost parallel movement, because you can see that this trend one line that was forming last several months is kind of parallel to the moving average 50 and at 200, and you see it's going with waves, sometimes using moving average 20 as additional support line that took place, for example, somewhere by the end of June, beginning of July. Then we had almost middle of July another support from moving average 20 here, etc., etc. So another one actually was almost as a support at the beginning of August, but then it was pierced, and then moving average 50 actually worked here as additional support line about 20th of August. And then what happened, actually the break broke, next wave in end of August and beginning of September did broke, and it formed kind of downwards channel here, which worked later as a spring point for the price to jump. And indeed, this started to happen, let's call it R1 line, the beginning of September, and the price went down, then sit on the moving, actually below moving average 20 and 50 on the T1 line, using it as a bounce support, and slightly recovering towards beginning of October. And exactly on this R1 line, which usually worked as a downwards channel ceiling, then it worked as a spring point, so we just push the price up, also during expectations of coming new earning reports and overall analysis. The price went up, sending price actually RSI wise in overbought area, and then seemingly it went upwards with kind of slightly declining the wave. But then what we see now, the moving average 20 is, instead of going upwards with a positive acceleration, is actually going upwards with deceleration. So it's forming curve like that, meaning that its second derivative is negative, so it's decelerating. And this is exactly reflected at the price action. 3 days we're sitting here, 3 trading sessions with dojis, and after hours today is showing already minus 2.26%. So price is starting to decline, and that could mean a major correction here, also supported by the fact that moving averages also 20 are kind of decelerating. To give you an example, similar situation took place in the beginning of August. Again, moving average 20 here was decelerating, and then the price went for further correction, restarting between moving averages 20 and 50 in this case. Well, shall this be here again the case, restart at the moving averages, actually between moving averages 20 and 50? It still might be, because if you look here, and that's where we're sitting at after hours, its support line is just sitting indeed between those two, but it's a first support, let's call it S1, and the chance that we will just sit on it, it's not clearly defined, so most probably the further decline will take place and further correction. Therefore, we could expect stabilization somewhere at the point actually between trend lines 1 and R1, because simultaneously here there will be additional support line at these levels, S2, and actually it will be a triple support line there. Let's call it S2. So at these points will be like free support lines. Currently R1 is also working a support line, accumulation of free support lines, which will be a very strong entry point, and advise the first entry for this stock. Later, should the price go down, there will be other opportunities, of course, to average down. In this case, it will be this very strong support line, and in case of further actually fade of the price, it will be just almost a little bit lower than moving average 200. So S3, S4, and then next entry level and average down will be actually just at S4 levels. So these are two levels to entry with a safe play for Twilio, 1 and 2. Again, average down is advised with 1 and 2, meaning like first you enter with 1 portion, average down with 2 portions. There is still one extra 2 support lines. Well, this one and the further one is really low. Just to draw them, since they exist also on the chart pattern, these would be then S5 and S6. Should any severe news come, which is less probable because we already have our Q3 report, the S5 would be the last defense for this one. Then the price should really rebound, but this will be more like a strong technical rebounds, working as a spring point actually. More technically, let's say smooth rebounds might happen at S2 channel, where the triple support point will sit, and then we can still try to recover towards the previous maximum. So to these levels, if of about 340, if not, then we might actually stay at the volatility line, which is formed here at these levels. And if we will stop upwards move at volatility line V1, this would mean that we are starting to form another upward ceiling point similar to line similar to R1, but the angle of it is still unknown. It will be defined by the rebounds. So if we just schematically draw our rebounds here, if, for example, if it would stop in these levels, and most probably it will be that line, and it will be R2 line in this case. Should we fade really low and then restart from the second circle, then actually S2 or this triple support point and R1, if it will continue, it might work as additional, as a new actually resist, creating additional downwards channel R1, and this will be opening channel. Actually, it's enhancing its width R1, R3. So these two possibilities can be here observed depending where we will rebound. So we really need to watch at Twilio closer and see the rebounds point. This way it will be understood actually what future steps can be taken and what will be the future for this stock. So having said this about Twilio, now let's go to Novavax. And Novavax actually, it's a stock that today did show quite interesting, you can say, behavior, because it did decline, and it's going down minus 6.7% with after hours behavior actually almost stabilization. So what would this mean for us? It might mean that we are sitting at this support point. Support line, let's draw it more on the bigger scale chart. So we just stopped at this support line, and now we are volatiling and after hours in its vicinity. But then the question is why the Novavax is overall going down, because it's a company that started in September its phase 3 trials for the COVID vaccine. And the reason for that is also based on the news that other big companies are restarting its COVID vaccines trials. So the pressure is rising and uncertainty is rising as well for all those companies that are now in this COVID vaccine marathon, you can call it. And with this, it might be that facing the risks of other companies being faster, still some further correction is possible for Novavax. And then what can be seen here is like actually the levels of support we can enter and should the price further fade down based on this let's say yeah, fear to lose the COVID marathon, the price might decline further, and then these are the entry points. So we are sitting already at S1 line, S1 support, and if we would draw further ones, it would be S2, S3. If the price continues to decline, opening us a downwards channel of trade, which can be then this line R1, and then another level is this one. Let's call it R2. So if the downwards trend confirmed by piercing the S1 line, then the downwards channel will actually define the further behavior of this stock, and therefore the first entry level would be somewhere between moving average 200 and S2, and maybe a little bit lower S2. So here it's still unclear where exactly we can enter, but in this circle, because this will be the downwards on the bottom of R1, R2 downwards trading channel, and then if we stay in the channel, we should actually recover and go to the top of the channel. And should the channel confirm itself, well, then yeah, it will be kind of some volatility game, and after exiting at S1, you can again re-enter at lower levels somewhere at S3. Should the channel be broken again, it will be another entry level will be at the S3 point, and then we will see if the broader channel will open, or we will just do a piercing of the channel and return to it. Again, here it is advised to buy and average down with the portions 1 to 2, as always we do. But again, this is important to note that still Novavax is actually now in highly competitive situation with another big pharma companies entering to COVID vaccine marathon. Should the good news for any other company come, actually all other small companies, well, relatively small, because Novavax is also 5 billion market capacity, but still it's smaller than its huge competitors on pharma market. All other companies should really fade or decline, because the first one who will get the vaccine working will actually take the bigger portion of the market, and immediately will of course acquire a lot of proposals and contracts to develop the vaccine. So this needs to be kept in mind. Overall, all pharma companies engaged in this development for the moment are kind of, let's say, casino approach, because if you bet on it, you just bet on it because you hope it will win. Otherwise, if you're not really specialist in this, you don't know what's going on behind the bars, then yeah, you can't know if it will work or not eventually for a specific company. With this, you need to be very careful overall, but until it's still, let's say, a chart trade, technical trade, you can take the waves and play on those. So the next one will be in this list, Chegg. And Chegg, the company is that, if you look at it more carefully, again, is kind of on the top of its current wave, but after hours, the price declined minus 5.26%. And then the question is actually what we can expect from Chegg, what would be the levels to enter. And this is quite strange for this company, because it's actually, again, Q3 reports were quite strong, but prices again fading due to higher pressure on COVID and all uncertainty because of this. So now we are minus 5.27% and volatile in those levels. Also, it is important to note here that Chegg itself was in quite momentarily bearish technical pattern, because we were slightly overbought RSI-wise and already staying these levels quite long time here. So this would inevitably mean some downwards pressure being built. And for the price, also, if you look at the MACD, let's say wave, it finished its upward move and now trying going downwards, so it needs to recharge itself. Usually this is also kind of bearish momentum. Of course, crossing the zero could be also bullish if there is a news or any chart combination, but here seemingly what is the most important, it's again the pressure due to COVID uncertainty, and also we are developing, let's say, technically chart-wise and candle-wise, doji with very big upwards and downward shadows today. And also we see that there is upwards ceiling for the channel top R1, which could mean that we are actually going to decline and at least restart the wave. And if we speak of these restarts, we need to take it a little bit deeper as a entry points, because we are already at minus 5.27. So price could fade a little bit further. And then if we would look at the next support lines, you can see that they are actually allocated like this. What is good here, the lower you go, the higher the density of support lines is, meaning that we can actually be more, let's say, safe with lower entries. And let's name the lines S1, S2, S3, and then S4. And also not forget that we have here 3 moving averages. It's moving average 20, 50, and 200 being green, blue, and red line correspondingly. Also, what is important to note here that we had the delayed magic cross up like almost 2 weeks ago here when moving average 20 cross from the bottom towards upwards movement direction, moving average 50, but the price action already did go up, so it didn't cause any upwards move further, just stabilization. And now we have this volatility decline. So still what could happen, we will trade tomorrow with big volatility and stay in the channel as R1, S1, but overall a piercing further is expected here, and most probably the first entry opportunity, the wisest one and the most safest one, will be at S2 level. And then should the price go further down, there will be serious fight between bulls and bears actually at the level almost at S4, a little bit lower, and between S4 and a moving average 200, which will work here as a very strong support line. Overall, saying that the company is still going upwards and everything should be kind of okay. But it's also important on the volume that will be traded, because if RSI level, although being overbought, will significantly go down and volumes will increase, the moving averages can start bending. And here, if moving average 20 will start bending downwards, it might cause a risk of making so-called magic cross down when moving average 20 will hit from the top moving average 50. So other effect which will be quite bearish in its momentum if it's not delayed, so if price will not go down before. And with this, again, it's advised to buy with 1 to 2 rule, so meaning you enter with 1 portion, average down with 2. Should the price rebound from the first circle, again, we might still try to kind of pierce upwards R1 line. If not, if we start from second circle, it would mean that actually the upwards movement kind of temporarily ending, and the point of volatility that will be decided somewhere between S1, S2 and R1 line will start forming downwards, the ceiling of the downwards channel. Again, it's unclear where exactly it will be, but just for your indication, the angle still be decided if we go really low at the second circle. But this is still uncertain. We will need to look at it later, how the price will behave. Again, as also in the previous example of Novavax, this stock is also impacted by the overall COVID uncertainty, and all companies somehow engaged to this or involved to these things are now going to final steps, and the pressure is rising. Of course, bids are rising, and yeah, uncertainty is rising either. But with big risks, there is also big opportunities. Although that's not how we propose to trade, we always advise safer approach, knowing where you enter, knowing when you exit. But some people prefer more casino styles, so it's up to you, but you won't hear those advices at our channel. With this, we would like to finish today's episode. Thank you for watching. Also, please don't forget to subscribe to our channel. Watch our other videos where you will see another interesting discussions and entry possibilities for US-based stocks.